Ira, I'm gonna run through some of these questions right now that people are putting in.
Yeah, I have a question from Mervin. ECB's Holtzman says ECB should lower inflation target in upcoming policy. Yeah, that's the issue that is, and it's not new. Others have raised the issue over the years, but nobody's, all of a sudden, everybody's found their voice now that Draghi is headed for the exit. But that's only because it allows them that 2% target, which is, it's crazy anyway. And they've all adapted it for some reason. It goes back to the Reserve Bank of New Zealand. Don Brash, who was the governor in the 80s, came up with it when New Zealand was trying to right what had been historically a very bad central bank and bad inflation history. So that's how they came up with that, and everybody's followed it. By moving the target down, which the Fed has talked about it too, would allow you to exit this craziness earlier. Because listen, if Europe has been almost to 2%, so if the target range was 1 to 2%, they'd be right in it, and they wouldn't have had to keep pursuing the quantitative easing. So that's what that discussion is all about. And Holtzman from Austria, the few things that he's written of late that I've read, certainly is from that school of hard money type people like Wiedmann and Ottmar Issing, and of course in the Bundesbank shadow. So they're all trying to figure out ways to make it an official policy and not, to get out of, keep heading down this rabbit hole. So that's all that is, and it's a good question, because if they did it, it would allow them to not continue the ridiculousness of QE and negative interest rates. But that's where it comes from, and that's how I'll speak to it. But outside of that, that should answer. If Mervin is on and wants to discuss it more, let's have at it. It's not an argument. It's a discussion. It's a good question. It's a good point, especially in today's world. So if that doesn't satisfy, let's dig at it deeper.
Merv, you're up. Okay, I guess he's satisfied.
Mervilla.
Okay, fine.
Here, you want to go through some of these other ones, Matt?
Yeah, well, Ira, there's a couple. I thought there was a couple of good ones.
Yeah, good.
What macro? Now, hold on. So there was a question about why the U.S. wants a currency pact with China, and how will that shape the future?
To me, it's a side issue, which means that some policymaker, be it Navarro, somebody fought for it to be into the discussion. I think it's a negligible issue because at this point in time, the Chinese have allowed market forces actually to weaken the currency. Now, everybody in this room who listens and who reads the blog knows my strength is about context. That's what I bring to the table, because all the decisions I make are based on a deep analysis and providing some perspective, which means context. As I like to say, kind of nuance that I understand, nuance, and I provide context. So those are my strengths. So, I mean, the yuan sitting at, I don't have to guess here, sitting at 7.08. If I make a bet, and I'm going to make a bet, it's probably close to let's see, I'm going to put up the 200-month. I'm going to get the 200-month moving average. Here's the 200-month moving average on my CQG, 6.99. That's the 200-month moving average of the yuan. We're at 708. Are we, it's okay. I go back to 94, January 1st, 94, as longtime readers of my blog know. as the critical date, because that's the day that the Chinese devalued the yuan from 5.8 to 8.7, a 50% devaluation. Now, even when the yuan was rallying, we made a dollar low. Now I know this can be confusing, so ask. Dollar yuan was 6.03. That was 6.03 yuan to the dollar in December of 2013. That was the low for the move, and we've rallied there. But if you really ask me in any technical level, we're really nowhere. So the fact that they threw that in, it's like somebody wanted it in there. Okay, it's in there. I don't even know what it means, to tell you the truth, because yuan could actually, appreciate a lot here. If the economy, and if that's okay. So don't lock yourself into any levels. Let the market determine it. Now, is the Chinese, have they orchestrated a weakening of it? I would argue that they have not. In fact, the only intervention they've done over the last 2 years has been to support the currency. Now, can they jawbone it down? Yes. But I think it was market forces that was pushing it lower, especially when the White House is busy boasting that their economy is so weak. Well, why shouldn't the currency drop? I find it a very negligible, and as New York Times reader would call it, it's a straw man argument. But somebody wanted it in there and made its way in there. Okay, everybody happy? Let's go on from there. And I'm not saying this to be flip. That's just the way I see it. I really don't give it much credibility.
All right.
What about?
I was kind of off on that because I was looking at the onshore, and then when I flipped it to the offshore, I could see the averages.
Yeah. Okay. So you know what? I'm speaking to the USD CNY, not the.
That's what I've got up. Yeah. It just took me a second to find it.
Okay.
Go ahead, Matt.
Another one was, any thoughts on the recent mid-month restart of Fed purchases? Seems unusual to start right before a meeting. And that's what I thought was interesting.
Oh, yeah. Yeah, this was, but you saw it in Powell's speech, and you saw it, the minutes, and he wanted to steal the thunder before he made that speech, and he did. So it got done. I found it interesting, but it showed you how nervous they were about another spike in the repo market. And as you can see, the market's kind of settled down. We've had a little push at times, but for the most part, it's been quiet. So they've gotten out of it what they've wanted to get out of it. But it's a good question, and you know what? And the timing of it was interesting. But I don't think they were afraid of going into that meeting following another spike in the Fed funds rate that would have really unnerved people, especially not coming at quarter end or a month end period. It was just due to a shortage of funds in the market, so they wanted to get out in front of that, and they have. So that's, to me, what that represents. Now, of course, the hills are alive with the sound of, is that a QE or is that not a QE? You're damned if you do and you're damned if you don't. It's a QE. You just changed the duration period. The interesting thing is that we haven't seen a quicker move in the steepeners. Everybody knows who's been in this room. The last few times I've been there, I've talked about steepeners, and I've had them on. The 2.5 and the 2.10. The 2.10 and the 2.5s are both. They stand, I think, to close above the 200-day moving averages today, which is good. Which for me is a good indicator on a Friday, and it's been a sustained move. Nothing significant yet. And I raised this issue, with these guys who I do a lot of work with, that if there's a shortage of T-bills to buy because a lot of money funds and others don't want to relinquish them to the Fed, is the Fed going to announce that they're going to take this out to 2 years? That's what I'm interested in seeing, because then it'll create even more demand and will actually act to steepen the curve. And when I listen to some of these Fed people talk over the last few days, a lot of this is about steepening the curve. So as much as I like this trade, I'm a little bit nervous now going, well, how come everybody's not piling into this trade? Why aren't the curves steepening in a much more dramatic fashion? So the slow drip, 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 while it's been profitable, is bothering me a little bit. So I'm very attentive to it. That's what I'm watching.
What macro perspective is the price of crude telling us concerning the future direction of inflation? So what macro perspective in the price of crude with inflation? And the only reason I'm asking it is because I think it's interesting with in light of the public push off of the IPO all over again after the bombing.
Well, yeah, that didn't take long. Again, and let me go, I don't think, and it's been my stance since the moment that Saudi Arabia announced it, is, first of all, where are you going to list it? Because if you list it in the United States, you run into the problem of litigation. Because I'm a shareholder, and you have shareholder activists. This is why I don't think you're going to see it. Shareholder activists, if Carl Icahn was a big owner of Aramco, and all of a sudden they become activists, even though they'll never be able to buy enough shares. But if they start making noise, why aren't you cutting production to raise the price of oil to benefit shareholders, right?
Right.
We see cases like that every day in this country. So I just don't know how Saudi Arabia would be because Aramco is as much a political institution as it is an economic institution, and it serves the bidding of the kingdom. So help me here. I just don't see it. It's fraught with danger. And that's why I didn't think, it's a nice, Wall Street will try to make it happen because the fees earned on this are enormous, and they're nothing but a fee machine. So, wow, everybody wants a piece of it. But I think, it becomes a make-work project for lawyers who will wind up, suing because shareholders will say, hey, you have to seek, value. You have to, everything I hear is about shareholders, and you're not acting in a fiduciary responsibility because, we just cut, okay, I just saw KSU exploded today. I haven't been paying attention.
Still is.
Yeah. Okay.
Off all day.
Yeah. So and what the market's telling us is that we're caught on a dilemma, and it's a good question because is just the market fully supplied? And $53 is a nice price for WTI. Are we in balance here? Is this a harmonious situation? That we don't know yet. We'll have to see how long it sits here. So. That would be my answer to that. From a macro perspective, I'm not seeing anything yet because you've had a lot of problems in the Mideast over the last 6-7 weeks, and we've gotten nothing out of it. We had that one spike up, right? That lasted, and we in real time because I remember this room met that day, and I said that's a pretty tepid response because that rally lasted minimus. As I was doubting everything that everybody was trying to push down the headlines anyway. So, and it's proven to be right, by the way. So, the market may just be in balance right now.
Yeah, it's got to get below 48 to really break out of that quarterly triangle, and they're just keeping it parked here.
Yeah, right. Okay, next.
Well, there's a lot of questions about Brexit.
It's good. There should be. And the answer is the market's telling you that it's taken it in a positive way, both with the euro sterling, which is back at 86.15, and the sterling itself, of course, which we're pushing back to the 130. It will probably close over 130, I would imagine. But it's also led to the rally in the euro, which we talked about the other day. I said the market's showing you, and interestingly, I'm looking at the dollar index, which I really don't trade. I just watch it. I can trade all the individual currencies I want. But right now, we have crept under the 200-day moving average today on the dollar index.
Oh, yeah.
And this is, and again, as I warned the other day, everybody's, there's too many people who are long dollars, and I'm just not seeing it. And I said for different reasons, but removing the threat of a hard Brexit seems to really want to help push the euro higher anyway. And so let's talk about Brexit. What's particularly...
Hold on a second. I'm just adjusting your... Pax, answer a couple of those questions, will you please?
Actually, so I'm interested in the S&P DAX spread, the S&P NASDAQ DAX spread, short SPOOs, short U.S. equities, long DAX. Is that based off of something that you saw with within Brexit, or is that more of a U.S. German?
Yes, and it's a discussion taking place, and I'm going to share that quote. I was going to write a blog last night about it, okay? But first of all, again, and I just had an hour conversation with somebody over in London on a conference call, and I surprised him because he knows for 10 years him and I have been talking, and I've actually been advising him that he's never heard me utter anything bullish about Europe. I mean, yes, at times, currency, but he doesn't trade currency, but it just fits part of his puzzle. But European financials, I've been bearish about. When other people, I had conversations with people who manage money for me at banks like Chase, and when they would say, well, our guys are recommending, back in 2016, 15, and 16, Kramer, they were all screaming, you got to buy European financials, they're cheap. And I told people, I said, if you're managing any money and I see any European equities in here, I'm pulling all my money. I said, if you follow what I write, I'm just opposed to it. Now, the question becomes interesting. And again, it's all based on Lagarde. And this is the conversation I had with the guy who was really surprised that I would even get anything remotely positive on Europe. I said, Christine Lagarde was brought in to solve two problems for Europe, because she's certainly not equipped to be the president of the ECB. She's not. It's just not her strength. She's a politician. And the politics are such at this point that there's two things that they have to get done under her leadership. Number one, we talked about it the other day, is creation of a euro bond, which seems at this a remote possibility. But when you push into context, maybe it's not, because that's what Draghi forced the issue, because he built up the ECB balance sheet into a massive balance sheet. So the question that I pose is then, how do you exit it? How do you exit what Draghi has done if you don't create a euro bond? Okay? Because you can fold all that in based on the percentages, because they've all been done by the capital key percentages. So you could do this, but of course it takes Germany to say, yes, we'll stand behind it. That's the whole key. And in Germany, they have Schwarz now, which is what's called Black Zero, and it's based on being fiscally austere. Now that fiscal austerity is plaguing all of Europe, and I'm not making any moral judgment about it. It's what the Germans are steeped in, and their history says we don't like to borrow if we don't have to, even though they have in the past when they've needed to. So again, it would take a euro bond coupled with massive fiscal stimulus in the EU, which when I talked to London this morning, this guy told me he was just in Germany, and he says if you look at Germany, but of course, again, it's hard to separate out what is the media narrative. The media is now talking about it. Oh, Germany's in terrible shape. Meanwhile, they're at record low unemployment. But, everybody talks about, well, the German infrastructure, which was always so great. Yeah, because, of course, they rebuilt it after the war, so everything was new and modern. And then they built more after 1989, so the infrastructure was great. But now it's, starting to decay, and Germany needs a massive infrastructure program. Those are the keys that want to make me be in that trade when I see them. Right now, it's totally theoretical. But it comes back to that question. Fiscal, if Lagarde starts pushing even harder on for fiscal stimulus, coupled with the beating of the drum for the creation of a Eurobond. Now, the Eurobond is it's what should have been done when they launched the EU. They did this all backwards, but that's because they had to, because they never would have gotten the Germans to go into this project without it. So they did it backwards to placate the Germans, just like, the worst thing that they could have done was the Maastricht Accord, which called for the Growth and Stability Pact, which limited deficits to 3% on an annualized basis. And in order to reach a certain growth, but you couldn't run debt. You couldn't run debt higher than that. So that's where it lies. But it was done backwards, and you needed to do it with a European bond. That's what you needed. You needed to consolidate that, but there was no way the Germans were having it because they didn't trust the Italians, they didn't trust the Spanish, they didn't trust the European Mediterranean countries, and they didn't trust the French. Oh. But the French underwent basically a self-imposed recession, and that was when Trichet was the head of the Bank of France, and he would squeeze. He had a policy called the Fort Franc, in which he protected the value of the French franc to the Deutschmark at all costs. There were nights that he would raise interest rates on overnight money to 100% to prevent any type of weakening of the French franc against the Deutschmark when runs were starting. So that was a policy in order to get the Germans to accept this. So the first step was the euro. Well, the euro was easy because it's just a common currency. But how do you have a common currency without a common fiscal policy? So that's what's going to be the discussion now. 28 years, 27 years, and then the euro was launched January 1st, 1999. So it's 20 years. They've had the currency for 20 years. So now it's Lagarde's turn to step up and try to do this. I cannot see any other reasons for her appointment. This has to be on the agenda, and that drives me to look at the concept of if they can get any of this done. If with all the jawboning and everything else, if the market gets locked into a mindset that it's possible, you're going to see it move. Now, as I emailed with Judd yesterday, that will drive the euro higher. Now, the question we'll have to ask is, will a stronger euro almost have a prophylactic effect on the European stock markets, on the DAX per se? Well, that's what we're going to have to watch. But if I'm a U.S. investor, and if I buy the DAX and the DAX does nothing but the euro appreciates, 10, 12, 13%, thank you very much. It's still been a good play. But coupled with a euro bond, coupled with fiscal stimulus, I have to believe that the European markets would outperform the U.S., which, if you look back, that's been totally the reverse. The U.S.'s equity markets have been a far better place to be over the last 10, 11 years than the European markets. So, that could certainly reverse, but if it reverses with the right policies, from an investment point of view, which is a fiscal stimulus as well as some type of consolidation of debt, those are the critical elements. And again, I'm just thinking this through and watching it. I actually put the trade on yesterday, but I took it off this morning. It worked out well because I hit the DAX late yesterday. But let me let me tell you what gives it more credibility. Am I talking too much? Should I stop?
No, please don't. This is
Okay.
fascinating.
This was going to be last night's blog, and I may have read this to you guys, but here's what Jens Wiedmann gave a speech earlier in the week. And I'm taking two quotes out of it because I have them written down. From Wiedmann's speech, he writes this, and it's a warning to everybody. And he goes, that is why independent monetary policy makers with a clear mandate remain a key foundation on which to ensure price stability in the future as well. So he's pushing that the ECB remain a guardian of monetary policy and don't start financing government debt. Because don't forget, when they're buying country sovereign bonds, you're basically monetizing and financing a debtor country debt, far better than they could, and that's in violation of the agreement. But then he says this at the end, and I found this quite interesting. He says, and he's comparing Europe to America, and he talks about Americans eventually opted for fiscal union. He's going back, and in the speech he talks about 1791, which I know we've talked with in this room, as if you go watch Hamilton, Alexander Hamilton, what was he? He consolidated all the individual states' debts, because don't forget, there were 13 individual states, and they all had run-up deficits to finance militias, and so he talks about this. Wiedmann, this really shocked me. So he says, Americans eventually opted for fiscal union, but it was embedded in a strong political union resting on democratically legitimized institution. A new constitution created a federal government with a range of enforceable powers fitted within a sophisticated system of checks and balances. It's a very interesting comment coming from Wiedmann. Very interesting, which really got my thoughts going. I go, this is highly unusual for him, because he's making the case for a total restructuring here. And if he's making that case, is it because he's pretty sure what's coming here, and if it's going to come, it's got to be done the right way? His speech was really, and the place where he spoke at was the Council on Foreign Relations in New York. If you take your time, go read the speech. I'm going to have it in the blog. Hopefully on Sunday morning, I'll blog it out. But I think that language is highly unusual for him. Highly unusual. So something is definitely going on. It doesn't mean it's going to get done. I can't tell you that. But now, if Brexit, and I think that's why the Germans pushed the French, especially, who were trying to block Boris Johnson, from getting what he wanted. But Boris Johnson really negotiated. I don't know that I'm pretty sure it will pass. But he knew he had the upper hand here, because if they went to a hard Brexit, Europe and the rest of the world would have shaken, because the Germans would have shaken, because so much of their exports in Europe go to the UK, and the supply lines are there for the German automobile. It would have been a severe hit to the Germans. And Boris Johnson knew that, and I think he pushed hard and basically said to Juncker and Barnier, go ahead, you want to play this game? Okay, we'll go. October 31st is coming. And I really think he shook them. But if that's done, now they can, and as somebody said, somebody in Europe, somebody in Brussels, now we can get on to more serious things, because this has tied our hands for so long. So, and I think that Boris Johnson was very, very well aware that he had more cards to play. Theresa May was never strong enough to play those cards, because I'm not sure that she believed them. Because don't forget, the narrative has been, oh, this is going to be terrible for Britain. There's what's going to happen. You know what? The common and accepted narrative has actually been very wrong, starting with Mark Carney at the Bank of England, who was predicting dire economic outcomes. They didn't happen. They didn't happen. That was right after, after the vote in June 24th of 2016. They didn't happen. So Boris Johnson played a pretty strong hand. Now, that won't, listen, if Europe, it'll get interesting, because if Europe were to actually start to deal with its problems, in fact, the ones that Wiedemann lays out, the Brits may say, okay, well, that at least there's rules that we can understand, so we may be better off inside this. I doubt it'll happen, but it gives them some room for maneuver, because what's going to go on here is now going to get very interesting. Very interesting.
Is Wiedemann...
Because...
I'm sorry. No, I was
go
just going to... And I don't know if this is off base or even anywhere near the ballpark, but is Wiedemann sort of hinting at, or even more than hinting at, sort of a united, either go or get off the pot, either blow up the Union, or what seems to be the Union, or actually have a United States of Europe?
Yeah, that's the question. I can't answer it. But as I've always maintained, that it's the Germans who are supporting this. And why do I say that? You want me to show you? Because tomorrow if the Germans said, well, we're not standing behind the ECB, what do you think will happen to the credit spreads in Europe? Yeah, I rest my case. It's the same that Greek 10-year rates are 1.33. Are they there because of the Greeks are such a good credit? No, they're there because the implication is that Germany stands behind the ECB. And not like Jerome Powell would say they have a printing press. They believe anybody who buys Spanish debt, Italian debt, Greek debt, French, they believe that it's all resting on the back of Germany.
German credit card.
That they stand behind it, which is what the implication is. So Wiedemann is basically, to me, is saying, hey, we all know this. So now we may as well put the political union in place, because that's what he says. And then, and it's basically an acquiescence. I'm not sure that, we'll see what the Germans will do. They need new leadership. Merkel's not the one, because she just can't make a decision. And she's actually been a tool of Draghi to do this. Well, maybe it's right. Or maybe that Wiedemann's saying we're in so deep now that, as I've laughed about it, from the Bronx Tales, now you just can't leave. Well, that may be. You can't leave. So if you can't leave and we're caught in this, how do we work this out? Because again, the key for all of us is understanding what's the exit strategy. Tell me what the exit strategy is. How do they get out of that ECB balance sheet? How do they get to a harmonized fiscal status? How do they do this? This is what the issue is, and this is what we are going to confront. As I said a couple weeks ago, going forward, this is going to be a big part of. I can't tell you about the investment strategy. We'll trade what we see, of course, and everything that comes with it. But this is what we're confronting, and these are really good questions because, again, that Wiedemann speech was interesting, especially where he gave it.
Yeah.
And what it entails. So,
one of the other guys was asking about somewhere a long way back about the European bank stock trades and if it was too late. When Ira first started talking about this in the room, it was the beginning of September, and those bank stocks rallied like 10%, and they topped out on the ECB meeting when all the rates kind of blew off, and they've been coming down ever since. And now that from the 7th, they started another bull phase. So I guess one of the guys, I guess the question was, do you still think they can rally from here, or do you have to wait for a pullback?
You know what? That's, if you think if you think you're going to miss out, buy a small percentage, and then, just keep be in a position where you're going to add. You got to look at each one differently, or if you're going to buy the index, buy the index. What can I say? But make sure you're getting some dividend cover at least. That's the way I look at it. Right now I don't own it. Well, I won't say that. I own EWG, which I've been in this trade. This is like such a great trade because I've been in this trade for a year, long the German index, and short the SPY basically. And if I tell you I've been in it for a year, and I think it's moved 3% each way, and maybe I'm stuck about 0.5% right now, which I have it on small, but it allows me to just keep focusing and keep my focus there and go, oh, what's going on? So, I'm playing with it. That combination will tell me when it's, ready to go, of course. And I could say it's not as yet, but again, if they can get this done, and don't forget when we first started mentioning about buying German financials, it was because of that Draghi's effort through the tiering. Remember that was part of the ECB's answer, was the tiering mechanism to make it less painful for the banks, because the banks were being hit with because of the negative interest rates at the ECB reserves. It was costing them money, so they had to restructure the tiering, especially once the Germans were opposed to passing that on to investors. It's been a hot button issue in Germany, so they had to redesign it, and the stocks have actually gotten a little boost from them. Even the Japanese bank stocks, the individuals have gotten off the floor, but they're pathetic. They're pathetic. These have been terrible investments, and I have the scars to show for them because they've done nothing. They've paid some dividends. So for the 1.5% that you get a year or whatever the dividend is now, it hasn't caused pain, but it's been dead money. This one, if you get the fiscal plan, if you get a fiscal stimulus, because don't forget, it starts with Germany. Once Germany would announce it, it'd be a free-for-all. But I think Wiedemann knows that, and that's why he talks about the harmonization, the consolidation, basically with that, is what you need, because if you go to fiscal harmonization across the EU, don't forget, the French and others didn't want fiscal harmonization because they didn't want the Germans telling them how to run their budget. Because that's when you do that, when you surrender your fiscal harmony, just like the first step to losing your sovereignty is surrendering your currency. The final step is the surrender of your budgetary process. Just imagine if the budgets were all set in Brussels with Germany carrying the hammer going, no, you can't do that. No, you can't do it. Well, what do you think the political situation in Europe would be at this time? It'd be insane. But now if they went into it with eyes full wide open and to be able to do it and to structure it in such a way, then it makes a difference. And the language that you're going to hear, because the pushback is going to be, and you can write this down because you're going to start hearing it, transfer union, which is that Germany would be sending money to all the highly indebted countries every year out of their, if they ran a huge current accounts, Germany would send money. They would be distributing their German wealth to the rest to support their economies on a regular basis. This is what Bernard Connolly has warned about as long as I've known Bernard, which is 20 years or so. So this is it. Are we going to get there? It's going to get interesting, especially once we get Brexit out of the way.
Thanks.
What's the name of that the Bernard Connolly book? I want to read that.
Heart of Europe.
That's it.
The Rotten Heart of Europe. And let me tell you something. Please, I'm getting rid of them. I'm still sitting on like 3,000 or 4,000. They are going. So if you want them, tell me. We can arrange it. I'll send it. Give them away for Christmas. People who like to read. Unfortunately, there's not enough people who want to read. But you can have all you want. I'm telling you, all you want.
Bring them.
Pay for shipping. I'll send them anywhere, wherever you want them. Come to my house. Come to the storage locker because I'm taking them out of the storage locker.
All right. I'll come.
So,
I'll pick them up.
Yeah, Pax, if you want to help me, we'll load a truck up. We'll dump them over by JB's and let them come there. Nobody reads in that neighborhood anyway.
Nothing wrong.
Not true, but I shoot at him. But yeah, the Ron, and all you do is you have to read the foreword to the book that he rewrote in 2012. Just because it's coming, and there's still a lot of these same actors involved. But the Germans are pushing back. This really, after Brexit gets done, Lagarde's coming in. November 1st. And if you believe that she was chosen for a purpose and not her banking skills, because she doesn't have banking skills, as far as I'm concerned. At the IMF, totally politics. She did what she had to do. They got the Greek bailout done. They provided to Argentina. So they calmed the global markets at the time, which was what she was appointed to do. And she had enough political savvy and enough political heft to get it done. So it's a very good point. But this is now going to become a big part of the discussion. And I think, Europe, again, they were not ready. If whatever's going on in Turkey, I can't tell you because I don't know. I'm not, there's not a lot I'm in agreement about. In fact, there's nothing, but there's something up here. And I think that Europe was terrified that Erdogan was really going to push another load of refugees onto Europe, and no time for you. This would really be disruptive. So, because they've got bigger things here. They got bigger things. Europe really is. It's getting to crunch time.
So, Ira, we've been talking. I've been just flipping through some charts, and what's picking up right now is the insurance ETF KIE, the regional banks KRE. Bank of the Ozarks. Goldman's trying to punch its way back up to the averages again.
Yeah.
So I'm just kind of looking at that stuff. Travelers Insurance just retested the 200-day and coming up. And I was just looking around for other opportunity, but I'm not really convinced about anything.
Yeah, no, it's hard to be. Again, that's why I think the message out of this room is treat every, and it has been, it's been the right message. Treat everything as a trade.
Yeah, and we had a nice trade today in the indices, and we got out when the NASDAQ bonds hit the 200-day moving average. It was as simple as that. It was gone.
Yeah. Again, what makes the premise right, if we'll go back to the FTSE, it's amazing that the FTSE has weakened as the pound has strengthened. So currencies do make a difference. For all those who want to sit and argue the point on any given day, currencies make a difference. Why else would the FTSE had held up pretty well as the pound was weak against the euro? Now we've had pound strength and the FTSE weakens. Yeah. Why should that be if it's all clear? There is a connection, and it really shows itself in that way. No, the regional banks. I've been a little. I see Verizon's breaking out again. Interesting. Didn't highs. Yep. Challenging the high made a year ago. It's interesting to see where we sit a year on, isn't it?
Yeah, that's a daily oscillator breakout too to the upside.
Yeah, but I just look at certain things. But look at if you go back to last October, October 4th, we're at 29.44. We're at 29.91. You know what? for all the noise, what is it? What do the Germans call it? Strum and Drang. We're nowhere. We're nowhere.
Yeah.
Boy, it's been a painful nowhere, though.
It depends on how you look at it. It wasn't so painful.
Good point. You know what? But if you've treated it as a trade, it's been good because you've gotten enough volatility to reward you.
And you got to take your money when they give it to you.
You got to take the money. You have to take the money. Absolutely. Absolutely.
Yep.
I take it that Kansas Southern came out with earnings today. We won't talk about that, but
Yeah.
again, they're doing well, and that's with Mexico. Really, the peso's finally crawling back above the 200-day. That's one of my favorites for whatever. So certain things are setting up here, and the fact that I'm not sure where the dollar is going to close at. I'm looking at the DEES contract on the dollar index too, also under the 200-day. So you know what? The board is starting to get interesting.
It's starting to get strong.
Yeah, and you got to be careful about taking these long currency moves. Well, at least the dollar index the first time through here, because it's getting into short-term oversold territory.
Yeah. Yeah.
Isn't Kansas City Southern isn't a bid in Kansas City Southern, and also the peso being bid, isn't that starting to look like a risk on?
Well, it's starting to look positive, right? That, and maybe something will actually get done with the U.S. Canadian Canadian agreement. Maybe, even though it's preposterous, it really doesn't change much whatsoever. But KSU, as we've talked about, is separated from the peso, which was highly correlated with, but it hasn't been for quite a while now. It's been one of those star performers quietly. And I always thought it was because Buffett was going to try to buy the whole damn thing. Maybe he still is. I have to look at his.
He likes.
But that's it. Any other questions we want to get to?
Is anybody else?
Hi, Ira.
Who's that?
It's Jack. I wanted to, not much late on here in the UK. I wanted to discuss this vote tomorrow and the implications if it were to fail, which is highly likely that it will, with the Democratic Unionists against it, with Labour against it. And the possibility that even if it does go through, we're going to be extended to late January.
Mm-hmm.
What would be the implications of a failure of this deal to go through, and or an extension, which is highly likely as well, regardless of whether it goes through or not?
Okay, I'll put it back to you. So if it fails, what do you think happens?
Well, I would expect. So we were talking about this earlier, and we were talking about the DAX and euro and the pound, and I'm looking at the DAX and considering that it would be strong for the DAX.
You think? I'm not sure why. I'm not saying you're wrong. I don't know, but let's push this out and think about it. So why do you think?
Well, the reactions to extensions have been positive. Reaction to Letwin Sir Letwin put forward his proposal for a new amendment today. That amendment is what would push an extension to late January. The reaction was positive, and this leads me to believe that these people, they don't want the deal to be rushed through. And would this extension, or would the failure for the vote to go through, continue that positive sentiment?
Yeah, that's a good question. But I think that if they reject it, does Boris go to an election?
I believe he
And make the
may.
election.
I believe he'd put one forward. I don't believe it would go through again.
Okay. Well, to me, that's the outstanding question, because I think Boris thinks if I go to election, I'm gonna crush labor, because Corbyn's been a joke. Yeah, they have no policy. As bad as the conservatives, the Tories have been. Labor's, I would argue, has probably been worse, because he doesn't know what he wants. Because of course Corbyn was initially anti the EU anyway.
Absolutely, this is what we discussed last time we were talking about this.
He was totally anti the EU, because he always viewed it in the same way that the unions in the United States looked at it, the labor movement looked at it, which was, it's going to crush us, and it's going to, it's going to make everybody, it's going to really harm wages, and it's going to harm it in a double way, because you're going to have to compete with the other countries, and you're also going to be flooded with EU citizens. So wages are going to have a lot of pressure. So he was opposed to it. So it's really hard for him to get out in front of it and say, I'm a Remainer. Well, you've got no credibility on it. And I think Boris Johnson would impact that. So I think Boris is kind of thinking, okay, you want to reject it? He must think that he can get to an election, rather than a referendum, but he would make the election a referendum on, let's just get this over with. I think that's his strategy. Is we've all had enough.
What happens if there's an election? There's an extension.
Right.
There's absolutely an extension.
Yeah, there has to be. Yeah, right, because otherwise they'd be interfering and they don't want to do that anyway. Right. Exactly. It gets extended, but it would put teeth into his negotiating, because if he wins, the EU is really behind. Because now he says, okay, I'm stronger than I ever been. Now what do you want to do? So there are a lot of people who would not like to see him, and every poll that I've seen up to this point, not that believe me, I say that with great fear that I'm talking about polls, because the polls have been so wrong for so long. But they do show that he could really do well here. Labor will be basically out, and the liberals may find themselves in a more powerful position.
We'd completely change. We'd have a stronger Conservative Party, bigger majority. Labour would lose footing. Lib Dems would be the second biggest party. So
we agree. We agree totally.
Yeah.
And I think that at the end of the day, when people vote, they may give Boris what he wants here, because they want to like turn him into Churchill, and then they can vote him out in 9 months. But if you go now, you really risk him coming back with a huge majority, and then you're going to have to live with him in other ways that you don't want to live with him, I don't think. But so I don't know, John. It's a good question. I don't have the answer. I don't. I'm looking at the market.
I certainly don't think I have the answer either. It's just something very interesting to me. Is the questions are is the euro stronger? While is the euro stronger with the UK in? Will the euro struggle if we come out? The faster we come out, do we struggle more? These are the questions which are running around my mind.
Well, it is, but I see now when I leave my theoretical sense and I look at the market, now I'm looking at how, well, you're British, so we'll call it the Betty. That's another name for all those who don't know their Cockney. In Cockney, they call the British pound the Betty, because Betty Grable cable. So that's for historians of the currency market. So yeah, so the Betty is actually, look at how well it's going to close out this week. So that's what I'm looking at. Now I'm looking at the 200-week moving average, which comes in on my CQG at 131.58. Right now we're at 129.45. But this is the best weekly close since May, which was that time when it looked like they were going to get something done. The window was closing, so we're back to those levels. Now it can fail from here, but if it pops next week and gets above the 200-week moving average, then I'll say the market is viewing this in a very positive light, regardless of what you and I think.
Yeah, and it will be interesting to put the two and two together. What happened this weekend and into next week, and where are we next week, truthfully, in price?
Yeah,
right.
Big area and a lot of different, awful lot for other reasons, but that's a big area.
Yeah, and it'll be interesting to see where the euro sterling cross goes to. That 82.50 area. Where are we at now? 86 something. Hold on.
86.18.
Okay, so that 82.50 area becomes really a critical area. I don't know if we're going to go there. My gut says it's performing pretty well. So that said, let's see. I know this very well.
640 is the 200-week there.
Yeah, and if you look back to June 16th, well, I'm looking at the weekly. So if you go back to June 24th, the high made after the vote, after referendum, was 83.17 that week. So this becomes very, very interesting, that 83 area, and then it'll be a good test to, because really, if they get this done right in any capacity, for all the doomsayers, the Brits have actually had a pretty good run here. And because of the cushioning of the economic blow due to the weakness in the pound, it's really aided and abetted their cause. So let's see. And again, pay attention, because whoever comes out, talking this, that, and the other, beware of any narrative that they may be and why they're selling it. Again, I advise everybody to get a hold of that Wiedemann speech to Council on Foreign Relations. It's not a long speech. He's actually pretty funny, and he lays out certain things very well. But John, I know I'm not answering your question, because you know what? There is no answer. There is no answer. I'm just looking to the markets to let me know which view is really the view that the money cares about.
Yeah, agreed. And we've got, you mentioned the other day, 24 months of volatility. Well, it's 1 to 2 years to even unwind and come out of the EU. So that it's going to be headline driven for a long time. And I think more volatility is on the way. Trade what you see.
Yeah, and I don't live in Britain, but I've always believed, people would try to compare Boris Johnson to Donald Trump. No how, no way. Boris Johnson is not a stupid man. Boris Johnson, and I'm not saying that Trump is stupid, but Boris Johnson is an astute politician and highly educated and knows his history. And I'm not in Britain, I don't vote, but I've watched him, and they just wanted to paint him as a buffoon. And that's a very inaccurate portrait, and people underestimated him, I think, at their own at their own.
He can speak for 20 minutes and you don't know what he's saying. He's wonderful with the English language. He is. He's really.
He's what?
He's wonderful with the English language. I mean, he can speak for 20 minutes and you have no idea what he's talking about.
Yeah. Yeah, but dig through there. He's not, and he understood the stronger hand. He wasn't buying into the narrative. Oh, we're doomed. We're doomed. We're doomed. I'll tell you what. Actually, the Brits can come out of here, because again, if he gets them out from the responsibility of the ECB, that's a victory in itself. I got news for you. If I'm a British citizen, because who wants to bear that responsibility? But if I can come back at it in 10 years after they clean up their balance sheet, it's kind of like being an investor in AIG after they took all the crap and ring-fenced it. That's when if you look at firms like that, who once they took, banks and everything that had their assets ring fenced, and all the good stuff was left for the shareholders, and all the bad stuff went to the government. That was the time to buy this stuff. Go across the board. So if the Brits can get away with that, they'll be applauded. And it really, because they're on the hook for a lot more than they think. Anything else?
I don't know. There's one of the guys was asking thoughts on LIBOR versus SOFR.
Yeah, that's a hard one for me to speak to. Again, there's a CME issue at the moment. SOFR's gaining traction because the volume's growing, and what you saw in the spike in the Fed funds market pushed a lot of people to SOFR, and SOFR performed very well. And I'm just giving you, what's in the common. There's nothing I know more than what's been in the common in the media. So it's had some staying power. And I saw this week that the exchange announced that they were putting SOFR in the SOFR options in the Eurodollar options. So they're trying to build. Which is, I think, a smart move. They're trying to build volume. And the Fed is behind SOFR. So there's a lot of things to it. I mean, LIBOR's always had its warts. Always. But the cost of the banks extracting themselves from what has been, there's no doubt it was manipulated for, not that the numbers are giant on a day-to-day basis or not. It's not like that type of manipulation. But it's, it's 3 basis points here, it's 2 basis points there, and you're talking on trillions of dollars. That becomes significant over time. So, and they've had to pay massive penalties, and the Fed really wants to have a much more genuine pricing mechanism rather than the LIBOR call-around markets. So that's all, as I understand it. And in that regard, I trust markets as more than I trust, the manipulative voices of a few, because that's the same thing as when they had the gold fixing. You guys are all too young. I'm old. Judd's old. But when the gold fixing took place in London for a few hundred years, of course, Sharps Pixley, Phillips Brothers, it was 5 people, Rothschilds, they would sit around and fix the price of gold twice a day, AM and PM. And that gave them a lot of power and a lot of market power and a lot of ability to screw investors. So I was never a fan. You had to watch it because it gave you an insight into what was going on, but it allowed 5 market participants who all had a monetary interest to set the price. And again, a lot of business is conducted at the fix. It's the same way in the currency markets. Or better yet, mutual funds. Do you remember how the mutual funds at 3 o'clock Chicago time when they would do their fix, how many games were played?
And then aftermarket too.
Yeah. Oh yeah, absolutely. And to go back and measure how much money, and I'm not going to say was lost, was stolen out of the hands of investors. Stolen, because you had to conduct at that level. It's the same thing with the currency. Why did the currency markets come under that? Because people were transacting their business at the fix. Well, if I could set the fix to a level where I know you're going to transact business and it's going to cost you an extra 3%, 2%, thank you very much. You're talking about significant money. Significant money. So much so that,
as Yogi Berra said,
my favorite,
real money.
Huh?
As Yogi Berra said, that's going to be real money.
That is real money. And I'm going to go back to one of my favorite, and I know I've mentioned it before, but you can go find it on CNBC. When Jerry Brown was the Attorney General of California, and he was suing State Street for manipulating the currency markets because California pension funds. He was doing other guys with the pension funds because they had foreign currency transactions that they were doing, because of their assets, and he was suing, and because they were manipulating the market against him, and he calculated how much it was costing, and when he had his press conference, after the press conference, the media was there, and Michelle Caruso Cabrera was there for CNBC, and she asked him a question, and the question was totally biased in favor of, because she's a free marketer, so it was in favor of State Street. And Jerry Brown looks at her and says, "What are you, pimping for them?" You can go see it on YouTube. It's such a great, "What are you, pimping for them?" It's great. It's one of my favorites because I said, yeah, somebody needs to ask that question more and more. What are you, pimping for them? I loved it. It was outstanding.
Ira, isn't her husband the CEO of Wisdom Tree?
Who is?
Maria Bartiromo.
No, it wasn't. It was Michelle Caruso Cabrera.
Oh, okay.
No. Maria Bartiromo, I think, is divorced. Her husband was Ron. Ron Lauder, maybe. No, whatever. I don't know. She was married to somebody with Ron Perlman. Yeah, maybe.
Perlman. It was Perlman.
Yeah. She was married to Ron Perlman, but I don't think they're married anymore. All these things are in play, but it's such a great hit that he just looks at her. I go, oh, yeah, okay, he's won my favor. That and Linda Ron, the fact that he dated Linda Ronstadt for years, it's enough. I heard that. I haven't seen that movie yet. I want to go see. I like Linda Ronstadt. I heard it's sad though.
I was glad to see her when she had a voice.
Oh, was she great? Yeah, she's great. But these are real. So that's the SOFR LIBOR. So anything that promotes markets and creates that transparency, I'm in favor of. Listen, I'm an IMM CME guy, and I've always loved the place because having done a lot of business on Wall Street, where they really historically, and I say this is a historical comment, have never liked transparency. They hated the IMM because the IMM brought transparency to the currency markets. That's a fact. Before, it was a black box controlled by a few people. But through the wisdom of Leo Mohammed and Milton Friedman, putting transparency in the currency markets made them grow. Anytime you get more transparency, markets grow.
Yeah,
markets grow.
Think about that in the 80s. If you were the financial officer at a multinational doing a currency transaction, you called your bank and they'd do you a favor by ripping you off between 80 and 150 pips on a trade. Yeah, no. Listen, when I used to go to American National, believe it or not, who I did some currency business with, arbitrage, I'd walk in there, and Dick Stockdale, nice guy, but they had the trades written on a blackboard. This was in the 80s. And I would see, Caterpillar, I'd see all the trades and levels. It was kind of laughed. Yeah.
How would that work? How did that arbitrage work? That arbitrage, so you guys would end the day with some Deutschmark, long some Deutschmark. You would run over to the bank and you would cash out? No. Here's the way it worked. I would give you the quick. So if somebody came into the pit and they were looking to buy, let's say, 200 Deutschmark, well, I would go to the bank and ask for a price. And they would make me a price. And when I got more sophisticated, I was doing it all in spot, and I would take all the forward risk. But initially, I was doing forward versus the forward. So if it was the IMM date was September 15th, I was asking for September 15th. So if I could buy them from them and sell them in the pit and make a profit, that's what I would do. But I had to factor in my borrowing costs. There was a lot of things that went into it. I knew. Go ahead. I'm sorry. I just wanted to say.
But it wasn't at the end of the day. I had to be in balance, meaning I could not run an open risk position Right. I couldn't be wrong, and not. I had to be absolutely matched up. And if I was in violation, the fines would be phenomenal. The exchange would close me down because they were basically underwriting the integrity of this operation. So I had to be in balance. There were days I would be there hand balancing till 8 o'clock at night because I could not leave the office. And the guys who were financing the operation, they made sure you're not leaving the office. You have to be in balance. We cannot afford. We couldn't be off one contract because they would call me from the exchange the next morning. Or the bank, I had a guy at Chase, because when we opened up an arbitrage with Chase, which was a great thing, a Chinese guy, Fred Ma, he would keep me there till 8 o'clock at night, even though I knew we were in balance. But because everything was not computerized yet, the exchange and myself had better systems than Chase, believe it or not. So he didn't have up-to-date information. He was 1 or 2 hours, and then he'd say, oh, yeah, I just got those confirmations. Okay, you're in balance. But there were days I'd be there till 7. I hated it.
Yeah, Ira, they were
but I
still
couldn't leave.
hiding their tickets under the desk.
Yeah, those were the bank guys. Yeah. Believe me, I had a partner. I had 2 partners who would have beat the hell out of me. Because their attitude is, we're big traders. We'll take all the risk we want. That's not what this is about. Do not jeopardize this business. And if I heard it once, I heard it 100 times. You want to take risk? Go take your own risk. You're not taking risk with this operation. And it really taught me a lot how to go. And I always appreciated that. But these were 2 guys who could have beat me to a pulp. So, yes, there was no, and I had to be in balance.
I love listening to these stories. That's why I ask, because I know that probably most traders haven't heard it. But this is something I don't know. Is that how the Merc became its own clearing firm, or own clearing house? No, they were always their own clearinghouse because they needed to protect themselves and to protect their clearing members.
Yeah. Well, what happened, Matt, was through this process, the corporate CFOs realized they were getting hosed by their banks, and they started hiring guys like Ira or other people from the IMM to come in and run their currency trading for them so they wouldn't get screwed.
Okay.
Yeah, it was, that's what guys did because it was such a blind spot. There was no transparency by design. Believe me, a lot of times, Wall Street was pissing all over the exchange at the time because they did not want the transparency. Currency trading was such a lucrative operation going into the late 70s, early 80s when speculators were doing it and all the money moving around the world as exchange controls came off. It was such a lucrative entity for them, and they hated the fact that there was now some transparency on pricing. Believe me, I'd hear it all the time, and they wouldn't give us, and I'd go, because I would have to go look for credit facilitations, different banks, and they didn't want any part of it. And then all of a sudden, when they started seeing certain banks were making a lot of money by dealing with the IMM, then all of a sudden, they all started beating a path down there. But it was due to the transparency. I'm telling you, you shine a light on anything, and it grows. Anytime it's a club and people try to keep others out, you're capped at how much growth you're going to have. Listen, nothing says it more than the currency growth that took place on Globex.
Just thinking about that, yeah.
And I'm going to tell you what, I was on the CME board, and I was having fights with guys who traded certain currencies that weren't trading much, and I go, no, we're getting this on Globex. And they go, no. And I would ask them this question. I said, I'm a board member. I have a fiduciary responsibility because I'm here to create volume. I'm not here to protect your profit margins. And my operative question would always be, would you rather just trade, and these currencies were trading 100 contracts a day only. I said, wouldn't you rather have access to trading 10,000? And they would say no, because they would rather make 10 ticks than have an unlimited opportunity. But they knew what they wanted. Listen, it was no different than with the pork belly traders.
I know. Oh, the pork belly traders. Okay, that's interesting. So when no, it was interesting. Yeah, interesting for a lot of reasons.
Yeah,
But,
this is our game. Get the hell out.
no, yeah. But you're talking about when they shut the pork belly pit down in what? Oh,
No, I was talking about when the first I spent
yeah, right.
180,000 over the IMM for a CME seat for a 1 minute $1,500 thrill, and told
Yeah.
you to not come back.
And JKL gave you the peeled off 1,500 and said, "Beat it, kid."
Yeah, I mean, listen, when the pork bellies were trading really well in the 60s and early 70s, there was a lot of transparency because it was so big. But then it kind of settled down into a club. And you know what? The lack of transparency destroys markets. So I'm answering the SOFR LIBOR. So
Yes.
SOFR, if I'm right, theoretically SOFR should really take off. But you know what? Everybody is so grounded to LIBOR because it was, that was the force mechanism for pricing all this. So we'll see. But my attitude is always, and my belief, and it's a learned belief that transparency and shining the light on anything gets you more activity.
What's the just out of curiosity, what's the open interest in both the LIBOR and SOFR? I
don't know. You can go find it, but
I know.
But it's been growing. LIBOR there's no real LIBOR kind. There's Eurodollars. There are a lot of synthetic, but there is the exchange doesn't have LIBOR. It has Eurodollars.
All right.
No, I don't think, you know what?
I remember when the LIBOR pit opened. I clerked in there the first week or two.
Yeah, but I don't think it ever really, because the Eurodollars were a satisfactory instrument for pricing it.
Makes sense.
Yeah, I don't think it never really. There's been some really good ideas that have never taken off as contracts. As my history, I've been doing almost 43 years already. Or I'm on to my 43rd year, but. You see it, but I will tell you this, transparency will create volume because people like to see, and then there's a comfort to it, that I know that last tick that I saw is a real price. and the exchange has always been masterful at providing that. And listen, there are a lot of people, when you have a club, see, I don't like clubs, and I don't care whether it's in the NASDAQ 100 pit, if there's a club, there's somebody in and there's somebody out.
Yeah, I've never joined a club that would have me.
Yeah, and when you get into that situation, whatever it is lacks integrity, because everybody's only worried about protecting what they have. Me, I'm a free market guy when it comes to that. Let it go. Let's see what the opportunity here is. So. We go back to the gold fixing. That was a club, and it didn't help the market. It gave certain people a lot of power.
Ira, I don't know why this. I don't know what made me think of this, but through the years and your work with the CME and just your work with the banks and hedge funds, how often did you get to sit at the feet of Milton Friedman?
I have a couple pictures with him. That's it.
Yeah.
On his 90th birthday, he came down to the floor, and I gave him a tour of the Eurodollar pit. Don't forget it. It was an extension 10 years because it went from 90-day money all the way back to 10 years, and I stood with him in the gallery, pointing out, and that was a great thing for me, just for me, because, again, as I've said many times in this room, one of the greatest parts about all this is the people I've got to meet. It's been unbelievable. And meeting him, unbelievable. There's a lot of things Milton wrote, and I've read a lot of it when I was in school. There were things I vehemently, back then I disagreed with most of his stuff, but it was very educational. And the guy was, and certainly is, a genius. It's funny, Leo, who I'm good friends with, was such good friends with him. In his house in Arizona, he has there's a Milton and Rose Friedman bedroom. So I asked him, I said, can I come sleep here? There must be some ghosts that, and Milton's wife was maybe a better economist than he was.
It's amazing. Amazing.
Yeah, truly amazing. I mean, she was very bright in her own right. But I've read his Monetary History of the United States, which was actually very good. I read that when I was in school, which he wrote with Anna Schwartz, which was the Bible for anybody trying to understand monetary policy. I mean, all good. It's been great. And that's why I can't walk away from it, because I just got loads and loads of real data. This is what I know. As my wife says, I'm an idiot savant, and she's right. But I go, it's encyclopedic knowledge of currencies. Now I listen to people come on CNBC talk about currencies, and I go, really? Mark Chandler, no, he was on with Santelli this week. But I've lived through it. I've had great teachers. I had Swiss bankers who taught me so much about currency markets. How they work. Now there's another closed operation, but they're interesting. But I would sit and drink with them, and they would really explain to me and get rid of all my naivete about markets and to pay attention. But the Swiss were, and still are, great bankers. And again, why? Because they just operate on the 10% rule. The Swiss always want to know, where's my 10% coming? Go make as much money as you want, but where's my edge in this, and how am I and will I get paid? And they're good at it. Listen, country's phenomenally successful because they understand that, and they understand the role, and that's it. That's it. Just where's my edge, and where am I going to get it here? Okay, all right, yeah, we can do this.
The only country I've ever seen somebody pay for a round of drinks with $1,000 Swiss franc bill and get change back.
Wait, you got change back?
No, I didn't do it. I was sitting in Zurich at a hotel bar, and I saw some guy do it. And I thought, my God, that's amazing. They just gave that dude change for 1,000 Swiss francs.
Oh yeah.
So it only cost 500 Swiss francs for the drinks.
Probably did, but the fact that the guy actually had it on him, and the other guy just didn't blink. There you go.
Well, what was it? What year was it? And was he an Arab?
It was like an 03, and no, I don't think so.
Hey, I'm gonna tell you what. You go to Japan, any society that operates on cash, that's the key. Japan's another heavily cash-based society, but with the Olympics, it'll be interesting to see whether, because so much of Japan is cash-based. Anything else? Otherwise, I'm going to.
All right, we'll let you go, Ira. Yipper's got.
If there's any other questions, I'll sit for another one or two. But after that, I'm.
Yipper was asking. He said, since currencies don't have volume, and they do have volume available in the same way that futures do. Oh, you mean?
Wait. Say that again. I'm sorry. Judd, I didn't hear that.
Well, he's looking at the FX markets, which are.
Yeah.
Because the daily volume, you probably can't pull it up somewhere. You can see the volume.
Well, the BIS runs volume number, and that's why people say it's a $5 trillion a day market. I've never believed that's a notional amount. I'm not a big believer in that number. I'm sure notionally it exists, but that includes all types of exotic things that traders like you and I cannot trade. We don't have access to. So what's the real number as far as I'm concerned? I don't know, but it's not 5 trillion. That much I guarantee you. That is a number of totality options, and it's all notional value. So, okay, but no, you can't pull up that. But that's a published number from the the OTC, the over-the-counter market, that people have run with. And I used to get mad at the exchange when our marketing people would quote that number, and I go, no, that's not the number. Because if you really ran the numbers about what the IMM did of the major speculative currencies in the world, meaning the Canadian, the Australian, the New Zealand, the peso, the Deutschmark at the time, we're doing a far higher percentage. So when you ask what's the, I can tell you the notional amount, and I'm using BIS numbers, is 5 trillion, but that doesn't mean anything to me as a trader. Nothing. Zero.
Yeah, and get off the whole idea of volume to begin with. You'd be better off.
Well, yeah, but don't forget the banks wanted to put that out there to make the IMM look insignificant, because I would go out to Wall Street and I would hear them selling clients, no, you don't want to trade there. They don't have enough value. You'll never get your stuff done. Meanwhile, there were times I was dealing with banks that if they had a big order, they'd call me, they go, look, I got a big order. Can you work this for me out here?
Yeah, they don't want to show it, and you got better fills in the IMM. And
exactly.
You could get filled on the bid, or you could get filled on the offer, and in the bank market, there was no way.
No way. So they would say, can you get this done, especially in certain currencies? Can you work this for me out there? I don't want to show it. Yeah, sure. Not a problem. So, so I would laugh, or they were concerned about when big traders came in and were doing a lot of business, like R&D, C&D, and if I didn't call them, they would get pissed at me, going, hey, we hear. I said, yeah, I was busy you're supposed to call us. I said, I thought we were, and when I would have a drink with them, I go, I thought we were insignificant. What do you need to know what we're doing?
Oh, yeah. Then Drexel had a guy writing back at me, and all he did was give him my positions all day long.
Yeah. That was the day when I know it was there. But that was, again, because Drexel was a speculative house.
Yeah.
And they wanted to know. It's the same with Sherrison. Okay. Anything else?
No. Hey, thanks a lot for coming in, Ira, and answering all
No. This is really good. So the more questions you see, then there's a better flow to it. And good. I'm glad we got to it.
Oh,
right.
Ira, you'll enjoy this. Carney on tonight, 10 p.m. BBC News. And a quote from the interview: Johnson's deal is net economic positive. So it only took him 3 years. He worked it out in the end.
After they beat him up, they beat Theresa May. They beat the hell out of these people. Oh, and now, wait a minute. Okay. Because that's because everybody has, at least tell me what your self-interest is. There's a self-interest everywhere. So you got, at least usually I have to dig through it, but that's a great point. Thanks, John. Everybody have a good weekend. We'll see where we go next week.
All right. Thanks, Ira. Have a great weekend.
Okay. All right.